Good morning, everyone, and happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, I usually start off with a welcome back, but this morning I guess it's more of a welcome back to me. I have returned from my vacation down in Mexico. I had a great week relaxing by the ocean. I did miss you guys though. I'm excited to get back into it this morning. As usual, we will be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. And don't forget to download the TipRanks mobile app so you can stay up to date with all the latest investment tools on the go. Links will be in the description down below. Now let's get right into this morning's exciting stock market news. Following gains last week, U.S. stock futures are slightly in the red this morning. Both the Dow and Nasdaq futures are currently down 0.20%, while S&P 500 futures are down 0.16%. Activist investor Ryan Cohen, who was the founder of Chewy and is the chairman of GameStop, has amassed a stake worth several $100 million in Alibaba. He accumulated this position in the second half of last year and is said to have reached out to Alibaba in August to express his belief that the Chinese e-commerce behemoth shares were very undervalued. It is said that he is pushing for the company to increase their stock buybacks. The company currently has a total buyback plan of $40 billion extended to 2025. Analysts currently rate the Alibaba stock a unanimous strong buy with an average upside of 18%. Following Tesla, Chinese automaker XPeng has recently announced that they will be cutting prices of their Chinese electric vehicles. XPeng will be reducing the starting prices for their best-selling P7 electric sedan by 12.5%. They'll be cutting prices between 10 to 13% for all versions of their P5 sedan and the G3i SUV. Analysts currently rate the XPeng stock a hold with an average upside of 14%. And Microsoft is expecting to hear from the European Commission soon regarding antitrust concerns about their $69 billion acquisition of Activision Blizzard. They are preparing a charge sheet called a Statement of Objections in regards to the mega deal, which is expected to be sent to Microsoft in the coming weeks. They have an April 11th deadline to finish the review of the deal. Microsoft said that they are continuing to work with the European Commission to address any marketplace concerns. They said their goal is to bring more games to more people, and this deal will further that goal. The Microsoft stock is currently rated a strong buy amongst analysts with an average upside of 19%. Now moving over to notable earnings reports. This week, we do have several big names to look forward to. We will be hearing from a bunch of big airlines, including United Airlines, American Airlines, Southwest, and JetBlue. And we'll also be hearing from MasterCard, Visa, American Express, Intel, and Chevron. Starting the week off this morning, we have heard from Goldman Sachs, who posted a much wider than expected loss. For their fourth quarter, they reported earnings per share of $3.32. That missed analyst expectations by $2.65 per share. Their revenue came in at $10.59 billion, which missed by $320 million and did decline over 16% year over year. Analysts do currently rate the stock a moderate buy with an average upside of 7%. Coming out with more positive results was Morgan Stanley. Their Q4 earnings per share of $1.31 was in line with analyst expectations. Their revenue of $12.7 billion did decline 12.5% year over year, but still came in $100 million ahead of expectations. Their CEO said that we reported solid results amidst a difficult market environment. Analysts currently rate the Morgan Stanley stock a moderate buy with an average upside of over 5%. And we heard from Silvergate Capital. Their stock is actually in the green this morning, despite missing on earnings expectations. They reported revenue of $60.93 million, which did grow over 23% year over year and was in line with estimates, while their Q4 earnings per share came in at 48 cents. That was 21 cents shy of analyst expectations. Their average digital asset customer deposits came in at $7.3 billion, which was down from $12 billion in the prior quarter. Analysts currently rate their stock a hold with an average upside of 27%, though the most recent ratings all have a downside. Now let's take a look at which stocks are the morning's biggest gainers and losers. We are having some technical difficulties with our chart this morning, so we're just looking at the biggest gainers and losers. Our biggest gainer this morning is led by National Instruments after Emerson disclosed a buyout bid of $7.6 billion. Trading under the ticker NATI, the stock is currently up over 17%. And our biggest loser this morning is Bed Bath & Beyond. Their stock is falling as investors continue to be concerned over liquidity, thinking that bankruptcy could be the only option. Trading under the ticker BBBY, the stock is currently down nearly 10% after falling 30% on the last trading day. So that is going to be everything for Tuesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning in the comments down below. I missed hearing from you guys last week. Thank you so much for watching. Have a great day, and I'll see you back here next time.